Ever wondered how to make more money in 2024? Your solution could be investing in the share market. This video will guide you through the ins and outs of share market investing. We'll take this complex topic and break it down into simple, easy-to-understand steps. We'll cover everything from understanding what the share market is, setting your investment goals, choosing the right investments, making your first trade, to monitoring your investments. Stick around as we explore the basics of share market investing. Before diving into investing, it's essential to understand what the share market is. In its simplest form, the share market is a marketplace for buying and selling shares, or ownership portions of companies. These shares are listed on a stock exchange, which acts as an intermediary between buyers and sellers. The purpose of the share market is to facilitate the exchange of securities between buyers and sellers, reducing the risks of investing. So why does it exist? Companies list shares on the market to raise capital for expansion, innovation, or other business activities. On the flip side, investors buy these shares with the hope that the company will grow, increasing the value of their shares. However, the share market isn't just a one-way street to riches. It carries potential for both profit and loss. The value of shares can go down as well as up, meaning investments can lose value. Now that you understand what the share market is, you're ready to start investing. Before you start investing, it's crucial to set clear, realistic investment goals. This is a fundamental step that paves the way for your financial journey. Think of it as setting the destination in your financial GPS. It helps you make informed decisions and keeps you focused. Investment goals vary from person to person, but regardless of what they are, they should be SMART: specific, measurable, achievable, relevant, and time-bound. Your financial situation, risk tolerance, and investment timeline should all be considered when setting these goals. Maybe you are saving for a house, planning for retirement, or building an emergency fund. These objectives should be reflected in your investment strategy. Remember, investing is not a sprint, but a marathon. It requires patience, discipline, and foresight. With your goals in place, you're ready to choose your investments. So let's move on to the next step, where we'll learn about selecting the right investments for your portfolio. Choosing the right investments is key to successful share market investing. To start, you'll need to do some homework. Researching companies and industries is crucial. You should understand what a company does, how it makes money, and its financial health. Look at the company's earnings reports, balance sheets, and news articles about it. You can find this information through many financial news websites and companies' own websites. Next, let's talk about market trends. Understanding the overall direction of the market can help you make more informed decisions. If the market is in an uptrend, it might be a good time to consider buying shares. On the other hand, if the market is in a downtrend, you might want to hold off on buying or even consider selling your shares. Keep in mind, though, that market trends are just one factor to consider. Another important concept is diversification. This means spreading your investments across different companies, industries, and even countries. Diversification can help reduce risk. If one of your investments performs poorly, others might perform well and offset the loss. Think of it as not putting all your eggs in one basket. Now let's discuss the concept of buying low and selling high. It sounds simple, right? But it can be challenging in practice. Buying low means purchasing shares when their price is low relative to their historical performance or their perceived value. Selling high, on the other hand, means selling shares when their price is high relative to their historical performance or their perceived value. It's important to note that timing the market perfectly is nearly impossible. So focus on making informed decisions rather than trying to buy at the absolute lowest point and sell at the absolute highest point. In conclusion, choosing the right investments involves researching companies, understanding market trends, diversifying your portfolio, and striving to buy low and sell high. Remember, investing is a long-term game. It's not about making a quick buck, but about building wealth over time. After choosing your investments, it's time to make your first trade. Making your first trade can be exciting and a little daunting, but don't worry, you're prepared. Let's walk through the process together, shall we? First off, you'll need to place an order. This is where you specify the details of the trade you want to make. You'll need to decide on the type of order you want to place. Limit orders let you buy or sell a stock at a specific price or better, while market orders allow you to buy or sell at the best available price. Once you've placed your order, the waiting game begins. The transaction may not complete immediately, especially if you've placed a limit order. Patience is key here. The market needs time to match your order with a suitable counterparty. While you wait, it's a good idea to keep an eye on the market. You'll want to monitor your investment, watching for any significant changes in the price of your stock. This will help you make informed decisions about whether to hold on to your shares or sell them. It's also important to remember that the value of your investment will likely fluctuate over time. Don't be alarmed if you see some ups and downs. This is a normal part of investing in the share market. Congratulations, you've made your first trade, but remember, investing is a long-term journey. Investing doesn't end after making a trade. Regularly monitoring your investments is crucial. You see, the world of investing is dynamic and ever-changing. It's not a set-it-and-forget-it kind of deal. Monitoring your investments allows you to keep tabs on their performance. Are they performing as expected? If not, why? These are the questions you'll be answering as part of your routine checkups. Staying informed about market news is also a key part of this process. Changes in the economy, industry trends, and company-specific news can all impact your investments. By staying in the loop, you can make informed decisions about whether to hold, sell, or even buy more of a particular investment. Finally, don't be afraid to adjust your strategy as needed. If your investments aren't getting you closer to your goals, it might be time to rethink your approach. Remember, investing is a journey, not a destination. With regular monitoring, you're on your way to achieving your investment goals. Investing in the share market can be a rewarding way to make more money in 2024 and beyond. Just as we've explored in this session, the first step on this journey is to familiarize yourself with the share market, its inner workings, and the principles that drive it. Next, it's crucial to set clear and realistic investment goals. These will serve as your compass, guiding your decisions and strategies. Then comes the task of choosing the right investments. This involves careful research, analysis, and consideration of various factors, including your risk tolerance and investment timeline. Once you've chosen your investments, you're ready to make your first trade. It's a thrilling moment, but it's also just the beginning. From there, it's essential to monitor your investments regularly, adjusting your strategy as needed to stay on track towards your goals. Remember, investing takes time and patience, but with these steps, you're well on your way to financial success.